Okay, so good morning, guys. It is Tuesday, the 3rd of April, and we're going to take a look at the market outlook for today, a little briefing, and take a look at specifically what happened on Thursday. So my broker was not open on Friday, and it was not open yesterday either. So we're going to take a look at the last day of trading, which was Thursday. And there's quite a lot that happened on Thursday that we can discuss and we can use as part of our trading. So we've got a blank canvas here. It's a 250 tick chart, this one. It's not a time chart. So it looks similar to a time chart, but I couldn't tell you what time frame. So what's interesting about this particular chart that we can use? Well, whenever you're looking at swings, we're talking about how a market will swing. For example, if it's higher, we're talking about how it would create higher highs and higher lows. Basically trending. Now, trending might sound very basic and straightforward to most of you because you understand the rules, but some don't. And it's a very, very simple rule that you have to begin to understand before you can start anticipating swings. So let me try and explain this. If you've got swings, you're normally going to be looking at something like that. Okay? And that's going to be split up into two parts. You're going to have an impulse leg and you're going to have a reaction leg. And it's the same all the time. Impulse leg, reaction leg. Impulse leg, reaction leg. Now, depending on what type of swing you're looking at, that might be one whole swing. That might be your major swing. And these will be your minor swings. Okay, so you just got to be aware of that. So that would be a minor impulse leg, minor reaction leg, minor impulse leg, minor reaction leg. But it makes up a major impulse leg. Okay, so this is what we're talking about with minor and major swings. So on Friday, I guess we would probably look at talking about this as minor because the overall swing would have been this. Okay, that was a major impulse leg. And as part of that major impulse leg, we had lots and lots of minor swings within that. Look at these. That's about as clear as you can get. And it starts to pull out like a slinky. Do you know those slinkies that you throw down the stairs and they flip over each other and go down the stairs? So it starts off nice and coiled and compressed, and then it starts to kind of widen as it gets faster and faster. And then eventually it comes to an end. So what's interesting about this? Well, I mean, it's interesting because it's a clean trend and you've got a higher high and a higher low. Now, you can only confirm a higher low. Sorry. Yeah, that is right. You can only confirm a higher low once the previous higher high is taken out. So this low here is only confirmed once that one is taken out. This low is only confirmed once that one is taken out. This one is only confirmed once that one is taken out. And you have to be disciplined with that. Otherwise, you're calling a low too early. But certainly when you're using it as a pivot for forks and things like that, you can only really use these as confirmed higher lows and pivots once those previous high highs are taken out. Okay? But it was a very, very clear example of how this market was trending. Another thing that I found interesting was just the simple fact that it was starting to expand as far as pivots were concerned. And we were kind of creating this megaphone of this expanding pivot. Again, was really interesting. But towards the end of the session, we kind of just continued to consolidate. So it didn't really continue that expansion. It all happened at the beginning of the session. Now, another point that I found very, very interesting was the fact that if you measure an impulse leg on a swing, they can often be very, very similar in size. And that's how you can see the uniformity or the, I guess just to see how structured the swings might be. So go and measure the distances on these and just see how they are. So for example, we've got that one there, that one there, that one there. I've not measured it particularly cleanly, but you know, you can get the idea. That one there, that one there. That one's actually a little bit longer, I think. I didn't quite catch that one. It should be over there. But look at the lengths of these. They're all very, very similar to within sort of 10 points of each other. And I found that very, very interesting. That you've got 5 or 6 there that you can start to anticipate. Probably that one as well. Yeah, look at it. So they're all very, very similar. That's about 7 different reaction legs there, or 6 if you ignore this one here. 6 different reaction legs, all of a similar kind of length. So you can use that information to start to anticipate when that particular reaction leg may turn around. So when you get a clue that it's turning around, for example, bouncing off of a multi-pivot line like that, or it creates some kind of wide range bar or a spike, double bottom, divergence, whatever it might be, whatever tools you might use, that can offer an indication to actually start to push this trade, and you continue to push the swing. If you imagine drawing a line here across these lows, you'd be pushing each time it tests this line. You'd be pushing to go long, pushing for another long, pushing for another long, pushing for another long, until the trend is broken. So that's a push type trade. So I find that really interesting. So they were just some observations from Thursday, which you can apply to pretty much any day, any market, live or otherwise when you're trading. And once you've got these confirmed higher highs and higher lows, they are pivots. So you can start to use those pivots. If we just take an example of these 3 here, because they look quite clean, that one, and that one. And you can turn those into pitchforks to start to anticipate where median line touches will come to give you another opportunity to get long or short, depending on which way you want to go. So some really, really good stuff that happened there on Friday. We talk about this kind of stuff all the time in the premium channels. So some of you guys I can see are premium members already. So you know you're already getting pretty competent at pulling your own thoughts together. You understand these tools. But for those who are not familiar, these tools can be fantastically useful, as I'm sure the premium guys can attest. And having a basic understanding of how to draw them can really improve your trading analysis. All right, so that was from Thursday. What we're going to take a look at now is just a little bit about some trading opportunities that existed and how to maybe identify some of those, because on Friday, I think we had a couple of trades. One of them was a loser, and I think 2 of them got off to good starts, but actually came out at break even because we decided to hold it for the target, which it didn't reach. So one of them was around about kind of 5 to 11, I think it was, and so that would have been probably, I'm trying to think where that was. Was it maybe here? I might need a different chart, and can't really see it as clearly on this particular chart as I can on others. Maybe it was here. Yeah, somewhere up there. So we looked to get a short position. I think it was a little bit earlier. It was actually about 10:30. My apologies. It was probably in there. This little peak here. Yeah. We looked to take a short position in here because we got some signals from a mean reversion strategy which we use. This particular idea just completely zoomed us. We've got a wide range bar there that you'll see as a clear clue that stop losses were being taken out, and we were part of that. So that was a 1% loss. We then had another couple of opportunities. I think one of them was around about there. At approximately 2:30, something like that. Yeah, 2:30. Took a short, got into profit, moved our stop loss to break even, and unfortunately it turned against us. But we were like 40, 50 points up on that one, which was nice. So congratulations for those who took profit on that. And these things were just discussed in the channels as far as the setups were going. And I think this one may well have actually been done live. I opened up a webinar on Thursday and we discussed this one live, to which we got into a trade around about 4, I think it was, probably about here. Yeah. So we took a short. Price did start to turn against us very shortly, but we had a stop loss a little higher somewhere up here. And then price went to turn around. And it was this particular one that was interesting because as price got sort of 50, 60 points into profit, the questions were, should we take profit here or should we hold it? I decided to hold it, but unfortunately got a tag at break even. So one of those things, that's trading. It happens. So what about today? What can we expect? What have we got as far as opportunities are concerned for today? Well, this was the first chart that I pulled up today to share in the premium channel. So it was just a very, very basic multi-pivot line. I'm just going to clear up some lines here. Very, very basic multi-pivot line which just connects a few of the lows, and then you want to get at least 3 points touching here for it to be a multi-pivot line. And you'll notice that that is a quite clean multi-pivot line. 1, 2, 3, 4, 5, 6 touches. And you can start to use that as a center line to start to predict where a possible reaction will go if the line is broken. So if I just try and connect these up a little bit. And so I'll pull an action line up here and just look at how it calls the reaction below. So once the center line is broken, you want to try and anticipate or forecast where price might bottom out. And you can use these action-reaction line sets to do that. They're just simple parallels based around what was a previous multi-pivot line. So I'm interested to see whether that one continues to hold price action. If it does, then we've got a gap close. That's a clear idea here. And you just got to be aware of a potential 50% gap close. It catches a lot of traders out that are going to go completely all in, expecting it to go all the way up, and it doesn't. So just be aware, maybe look at taking some profits halfway through at 50%. So that's one option. Now there's a wide range, it's not really wide range, but there's an outside bar, bearish outside bar here, the last candle that formed on Thursday evening. It's a bearish engulfing outside bar, so it was higher and lower than the previous candle and wider than quite a few of them. Suggests that there is some bearish activity forming. There's probably quite a lot of people that are long, that are trapped here, so there is an opportunity as a pocket for those traders to dump their position in this level. So if price gets up to there, there's an opportunity to short. As far as longs are concerned today, there's an opportunity to get long from this previous area of consolidation down here, or probably more specifically, actually a little wider. It's probably more like that. So, you know, just maybe taking out this low a little bit more, it's probably going to trap quite a few traders who will think, right, let's just short this, get down to 10,800, but actually it doesn't do that. It's just going to simply get you trapped and take you higher from here. So that's an opportunity that I'm looking for, maybe for today. And I think the last thing just to be aware of is that on the 4-hour chart, we've got this pretty bearish downsloper, which is a bearish fork. And so there's an opportunity for us to probably try to test this previous low or this median line on this fork. And that would suggest a pretty bearish trade. So whilst I generally like to buy equity markets, I am happy to concede if this is ready to turn, that there's an opportunity to get short here. But I'd like to see this close of this gap, hold that high, and then maybe look to take a short down there. Right, guys, that is pretty much what I wanted to go through today. Keep it nice and short. I'm going to stop the recording here, but if you've got any questions, feel free to ask them. All right, have a great trading day. Catch up with you later. Take care.